vlog about day trading. Yesterday I was doing some day trading yesterday afternoon in my practice account. Living the dream, mate. It's like using Monopoly money, isn't it? Great, but you can't spend. You can't buy a Porsche with it, can you? You couldn't buy a bar of chocolate with it. But the principles are the same. So yeah, there I was, right? Yeah, day trading, and I chose some options. I was trading options in my practice account. I won't say which ones because I use them quite frequently. But so it's just after Christmas, New Year. So but in the States they don't have Boxing Day, so they must have normal day. The stock market must have been open. But so there I was, and within about 45 minutes, well, I bought 1,700 options in one option. One option. I bought 500 in another option and 100 in another option. So I had three trades open, 3 day trades open, and there I was. Within 45 minutes, I was about 800 quid up, off a balance of about 50 grand. So my day trades were all in profit, and I was like, yeah, happy days, yeah. And I was thinking, oh yeah, should I cash out? Should I cash out and finish my trades? I thought, nah, because the best money, it works both ways. When you leave them overnight, but you've got to be able to be comfortable leaving your day trades overnight, and not be that phased if they go down 4, 5, 10 grand per trade. Which is why they say don't invest anything that you can't afford to lose completely. Which in this case, and my trades, so I could have actually closed the trades about £1,000 up in total. Okay, it's in a pretend account, but the same would happen in a real account. I could have actually closed the trade within about 45 minutes. Opened and closed within 45 minutes. £1,000 up. And just then walk away. Yeah, just leave that in the balance for another day. But I thought, you know what? It's almost at a new year, and day trading will start again. Huh? All the stock market will open, and yeah, and it'll find its level, won't it? So I had a power nap last night. Fell asleep. I've just checked my day trades now at midnight, and those that were £200 or £300 up each are now £1,600 down on 2 of them. So instead of it being £1,000 up, which it could have been within 45 minutes, is about well when I was trading, uh, I'm now £3,200 down, and but then that gives you a decision to make. Then you've got to either decide: do you stop at 3,200 and cut your losses, or do you allow it to trade? Because then at some point, it's the stock. Okay, so it's an option for January. It's a January option, and I'm on a call in options. Options are you get puts and calls. There's a good I can't think what it's called now. If you go onto Twitter, or there's a good Twitter account that talks about options. They trade options, and they can tell you all about the options. You can learn how to trade options, on Twitter. If you follow up, it's called Tasty Trade. TASTY TRADE. Tasty Trade. And they talk a lot about options, trading options, day trading options. And they'll show you graphs and videos and whatever of day trading options, or like, yeah, and chat with experienced day traders. I'm just somebody that's trying a practice account. I'm only going by what I'm only going by what my own experience with day trading, me teaching myself. But if you follow Tasty Trade, it's a good Twitter account to follow if you do that thing. So yeah, so I'm now 3,200 quid down on three options. One was in profit, which is about 10 or 20 quid. Some consolation. But it's what you do when it goes to that situation. What some will actually just say, I don't want it going any further down than that because that'll eat all my balance. Then they will actually trade out. They will what do you call it? They will close the trades at 1,600 down. But that's all well and good. So you've lost 3,200 off a balance of about 50, which is not even, what's that? It's not even 1%. 10% is 5 grand. So you're about 6% down or whatever it is, yeah. So yeah, but if you're 6% down, okay, so you're 6% down, but then you still don't really understand. If you trade out, if you close your trade at 600, 3 grand down on a 50 grand balance, for example, um, you're gonna you, you've lost where you are in the you've lost the waves effectively, if that makes sense. You know, on the graph, it goes up and down, up and down. It's almost like in the sea, in a waves going up and down. Right? If you let the trade ride, because all that's happened is that you've actually got to the top of the wave, and it's come down. Yeah. But how far down the wave are you coming? Let's just say it's coming. It could be a big wave you're coming down. Effectively, it's just like I view the graphs, because I watch the patterns in the graphs when I trade, and it's so once you recognise the patterns, so some do just by numbers. Well, I do a combination of the numbers and the patterns. Some can do the lanterns, the Chinese lanterns, or whatever it is. There's different ways that people like to trade. Some you'll see if you don't put day trading into YouTube, you'll see that the blue and red lanterns. Some you'll see the patterns. Some you'll see just numbers or just like a figure. And you can sort of set by a percentage or whatever. Yeah, I do by a percentage of the figure and the patterns. I don't do the lanterns, but I can do. I know. I understand the lanterns pattern and can do it from lanterns if I wanted to, but I'm not. So then you get so, but when your trades start to go pear shaped, you're going down the wave. But unless you let the trade run, you don't know the width, the depth of the wave, do you? So let's just say it's gone down. Let's just say your wave has gone down 3 foot. So your 3 grand is about 3 foot of the wave going down, yeah, in the sea. It's like the same as patterns on the graphs of a day trading chart, right? It's gone down. But if you trade out, if you cash out or close the trade at 3,000 down, you don't know how big the waves are, do you? The day trading wave of the option. Only by letting the Only by letting the wave finish to the bottom of the wave do you know what the depth of the wave effectively. And when you get to the bottom of the wave, you may be down 10 grand, yeah. But you know where the wave is, and then it'll go back up to positive again. So if you leave the trade as it is, you'll start to see the wave come back up, and your losses of say 10 grand, for example, would come back to about 6 grand or something. So but then, but to get to that situation, you've then got to, if you see, if you trade this 3 grand, if you close the trade at 3 grand down, to get the 3 grand back, you've got to day trade it, haven't you? You've got to earn your money, haven't you, by day trading it? Or you can let it ride and let it earn itself. It just takes a longer time for it to go to the bottom of the wave and then come back up again, above where you started your day trade. It may take a week. It may take, so what would have been like a 20-minute trade, or a 5-minute trade, or 1 minute 30 trade, or an hour trade in an option, you can it may be a week and a half trade. But then you've got to have the patience to actually do the trade for a week and a half. Some don't want that, and then you find yourself 10 grand down and think, oh dear, I can't let it go any further. But you've still not found the wave until the wave starts to actually reduce. The wave, you start to ride up the wave, yeah? Just like you are, when you buy a trade, you're on a boat. You're effectively on a boat in the sea, right? And you go up the wave, down the wave, up the wave, and you're looking across the sea and think, oh, that's a big wave up there. But and if you time that right, if you go up the wave and down the wave, yeah, that's where you make your money, yeah. The thing is that when you buy your trade, you either know where you are on the trade, or you're prepared to take the risk and see where you are on the trade. And sometimes you're going down the wave, yeah. But once you're actually on the wave, then you go up and down the wave, so you can make your money up the wave, and then you make your money down the wave, and you make the money up the wave and down the wave, yeah. Up, and then you're actually into like quids in effectively, yeah. But you won't know that until you ride the wave that's just cost you 3 grand, say for example, on my situation on the 50 grand balance. You won't know that until you got to crash down the wave, and that'll tell you where you was on the wave, yeah, where your trade started on the wave, and everyone's got to do it, and then only then do you find, so then you find you're at the bottom of the wave, and then you start seeing your balance. Then you go, yeah, and you'll work your balance, and it's almost like, yeah, that's it. It's no different to waves, yeah. And but they're graphs, so they're day trading waves, effectively charts going up and down, all the time, forever. And every time you come in and out of a trade, you need to know where on that wave, effectively, you are. But usually you get shown where you are on the wave by the profit if you've done okay, which means you're riding up the wave, or the, what do you call it? Not the profit, the loss of the wave, of your trading balance, and that means you're coming down the wave. But you have to find the bottom of the wave, and you only do that by letting the trade run itself and let it do what it does. And the best example of that is, I listened once to Warren Buffett is a brilliant. If you ever, if just type in Warren Buffett into YouTube, and he's one of the, well, he is one of the world's richest persons, and he is what the reason why is that is because he's one of the world's best investors. He owns the company called, or owns or co-founds. He owns the company Berkshire Hathaway, Berkshire Hathaway, Hathaway, Berkshire Hathaway. I think his shares are in that are about £200,000 a share. But then again, people that buy them have done well over the years. And that company that he owns banks, it owns big parts of Coca-Cola, it owns it all. But he doesn't do day trading, but he doesn't buy gold. People buy gold in recession. We could be due a recession soon. So again, the whole thing is like you need to establish how you trade and what parameters you use when you trade. I don't take this as advice because I haven't got a clue, right? I'm just learning myself. I'm teaching myself, and I'm just actually vlogging how I see my day trading. I am not qualified to give advice. I'm just a person teaching myself day trading in the stock market. I only found options by complete chance, right? I just knew that Tasty Trade was saying there's good money in options, and I thought I'd have a go. That's where I am. Yeah, so I'm not a qualified, but I've been a fan of Warren Buffett, the investor, for years. And the same is true in day trading. He buys parts of businesses, and day trading you're just buying options in a business. Just for you might have the trade for a minute and a half. You might have it for an hour. You might have it for 2 or 3 hours. You might have it for a week. But what you're effectively doing is buying options. You're trading options. You're in that company for however long you day trade. Or sometimes it won't be a day trade. It'll be over a few days. So, but the thing is, you're making money. Again, Warren Buffett likes to buy fields. Effectively, he looks at his stocks as fields. He buys them. He makes money from the fields while he owns the fields, and when he sells the field, he's still got a field to sell. But he's made money from the field while he's owned it. It's like Coca-Cola. He reckons it's the best share ever. It's a pricey share, but it's good because you buy the company or buy a big chunk of Coca-Cola, but the amount of Coca-Cola going, it's like a river of Coca-Cola, which he's making profit on all the time he owns it. And if he sold his stake in Coca-Cola, he'd make money from the stake as well. So he's making twice, isn't he? And I know I've waffled on a bit, but you have to find when you're day trading, you've got to find the parameters of the wave, your pattern. So I look at, well, it depends. Sometimes I look at when I'm doing my research. So what I do is that I look at, you have to know when the stock market opened, of when you're trading. Let's just say you're trading in the UK, for example. You need to know when it opens, and what happens. It doesn't always, but I think it does. Obviously, every time that the market opens, it does something different. But I think it opens, and no one's got a clue how it's going to react. It's like going in the sea, yeah? It's a shark in the sea. No one knows. You have to. It's like crossing the road, isn't it? You don't know which way. You've got to look at the road before you cross it. And the same as at the stock market. You've got to look at how it's. Yes, there's some good money early on, but it's all over the place. For the first 2 hours of the stock market opening, the stock market is all over the place. It's going up and down, all sorts, right? It's just whoa. It's a very choppy sea, if you want to use a sea analogy. But then, about 2 hours into the stock market, it finds its direction. And it usually goes that direction then, after 2 hours in. There's been buying and selling, or some people may have left trades overnight and they're eager to get to the market to sell the trade, which affects the market, I think. I'm just guessing. But this is me just guessing. But I reckon that the market goes all over the hockey for the first 2 hours, up, down, every which way, right? It hasn't got a clue what it's doing, right? And then, about 2 hours in, it starts to find its what do you call it? It's which way it's going to go. It might go down. It might be just a whole day of negative trading. It may be a fantastic day of positive trading. But it's almost like a semicircle if you think about it. A semicircle. The first couple of hours are all over the place. Then it starts to form. It's like day traders have got a balance and they've got to trade that day. So they've got to guess how the market is and how it reacts, and then they're in the trade. Then they buy the trades. It's just my opinion. I know nothing, you? It's just my opinion of how I see it. So then it's like a semicircle. Say like your phone. Look at your phone. Look at a semicircle. It's either it goes a semicircle going down, which is negative trade, and a semicircle going up. Not a set square. You know, a set square. Back at school, set square. Not that one of them. It's the semicircle thing, right? It's one of them. So because day traders they'll be in and out of trades all day long. But towards the end of the stock market day, well, from about in the UK, from about 1 o'clock, you start to see trades being closed and it starts to go downhill. That's the start of the closing of the market. From what I see, anyway. And then because the market closes about 4 o'clock, is it about 4 o'clock in the UK? So, and where all the trades will be finished, but they're then working out their positions and working out. But it's good to see. But you don't want it. It's like a market effectively, yeah. The market, you go downtown, the market. They're closing up early. They've started early, but they're closing early. And then they're putting away. They're still doing a bit of trade while they're putting away, while they're putting the fruit and veg away. Yeah, they'll still take. Someone wants to buy some strawberries or whatever. They'll still do that, but they've closed. They've made their mind up. They're closed. That's it. They're packing up and they're going home. But they'll still sell whatever they can sell while that's it. But they've made their money, and they're going home. But they'll still take a few trades here and there. But the main money's been made. Yeah, they're just packing up and tidying up and going home. And that is the stock market effectively. I've waffled on all over the place now. Data's going whatever. But that's what it is. You've got to find out where the wave is, and then when you find the wave, you find the top and bottom of the wave, and then you know where you're actually trading, and you can trade up and down the wave effectively. But instead of actually the wave, in day trading, you're trading up and down the pattern. Yeah. So I've actually I could have cashed out on my, but I've left my trades to go, and I'll leave them in and to see where the wave is. He says I might not, but that's the plan. Is to let them just ride and see where they go. Because we're into like a new trading year now. Anyway, we're about a couple of days from the new year, and it'll after next Thursday, we're into a new year. So there won't be much happening next Thursday and Friday, but the week after, it will start back as it goes. We'll just see where we are and how the high street performs and all that. So everything's got it's just the way I see it. Other people might see it differently. But I'm just seeing it how I would see it when I trade. But then again, usually I don't really care because I'm only in a trade for a minute and a half anyway. I've bought the trade, and then I've closed a minute and a half later. I've closed it, and that's it. So I'm just looking at something there. But that's just me saying from my day trading in a practice account using live share prices. Obviously, it may be different in a real account. I don't know. I haven't got a clue. But I'm just seeing what I see at the moment on the patterns, on the day trades, etc., etc. Thanks for listening to me waffling on. Obviously, I'm not qualified to give advice. Do not do your own research before you trade, and don't invest any money that you can't afford to lose completely, because you probably will. In day trading, it's very easily done, and that's not any reflection on yourself. That's just every day trader loses money at some point. Take care. Thanks for listening. Ta-da.